Hey everyone, welcome back to the channel. So I want to take this video to talk about what's happening with Bitcoin, because Bitcoin is going crazy. It just topped 50,000. I'm not even sure where it is right now, maybe higher than that. But what I've been seeing is a lot of euphoria around Bitcoin and the fact that it just keeps going up, and it seems like there's nothing that's going to cause a big drop in the price of Bitcoin. It'll just keep going up from here. And so even though I own some Bitcoin, I do still see a lot of risks out there that aren't really being talked about that much. And what I think is one of the main threats to Bitcoin is something called Tether, which is a different cryptocurrency and is very closely linked to Bitcoin and definitely has an impact on what Bitcoin does. And so here is a fantastic article I found written about this relationship between the two and how there's a potential scenario where this could end badly for Bitcoin. So I'll put a link down to this article in the description, but I'm going to walk you through it in this video and share my thoughts on the possibility that Tether isn't really backed by anything, which could result in the price of Bitcoin collapsing. So first we'll talk about what Tether is. So Tether is a different cryptocurrency by a crypto company called Tether Ltd. Tethers are supposedly backed by dollars. So each Tether is supposed to be worth exactly $1. Now the big red flag that jumps out right away, you can't actually verify this. The company hasn't actually done an audit or anything like that to show that they actually have the amount of dollars per Tether that they claim they do. And so that right there is red flag number one. Now the thing is, it's widely accepted that each Tether is worth $1, and because of that, it's used a lot on cryptocurrency exchanges as a way to buy Bitcoin. Now this isn't just me saying this. Tether is actually under investigation from the Office of the Attorney General in New York, and that was announced back in 2019, so almost 2 years ago at this point. So this has been going on for a long time. Now it starts to get worrying when you take a look at the relationship between Tether and Bitcoin. Because if you look at the crypto market as a whole, a lot of Bitcoin is being bought from Tether. It's not from dollars going into Bitcoin or any other national currency like euros. It's a large percentage is Tether. And so here is a representation of this. This is just for a 24-hour period, so probably fluctuates every day. But what you can see is the vast majority of buying of Bitcoin comes from Tether. Probably more than the dollar, the yen, the euro, and the pound combined. And so over this 24-hour sample, over 2/3 of all Bitcoin were bought with Tether. And this wasn't with Bitcoin, as this graphic shows, also with other cryptos like Ethereum, Litecoin, Cardano, I don't know what that one is, and Bitcoin Cash. So it seems like a lot of buying of crypto is coming from Tether, not actual dollars. Now to take a look at the sort of reliability of Tethers, to take a look at what exchanges trade in Tether, because there's a lot of different Coinbase exchanges. Some are fully licensed with the financial authorities in the US, and some are not. And so if you go to a crypto exchange like Coinbase, which is the one I use, and I have a link down in the description if you want to sign up with it, you can get up to $30 in free Bitcoin. But if you go to an exchange like Coinbase, they are fully licensed, and it's pretty clear that everything is legit there. But there's some other overseas ones that are pretty sketchy, and it turns out those are the ones that are using Tether the most. So here's another graphic showing how crypto trades through Coinbase. Again, this is one 24-hour period. And so from this image, it's pretty clear that it's mostly US dollar and then euro and British pound. So Coinbase, most buying of Bitcoin is coming from national currencies like the dollar and the euro and the pound. And then the author of this article took a look at 3 other crypto exchanges, which are the 3 largest crypto exchanges in the world: Binance, BitZ, and HitBTC. And if you take a look at these, the vast majority of Bitcoin buying is actually coming from Tether. So we can take a look at these charts. Tether is the vast majority of this one. Same here with BitZ, it's Tether. And then HitBTC, again, Tether, the vast majority of Bitcoin buying is coming from Tether. And all 3 of these Bitcoin exchanges, I'm pretty sure they're not licensed in the United States. They're all overseas exchanges, which does make them more of a security risk, at least in my opinion. And so it definitely says something when Coinbase, which is probably one of the most reputable crypto exchanges, doesn't even allow Tether on their platform. But then you have these other huge exchanges like Binance, which has 50 billion worth of crypto volume, and the Bitcoin on that exchange are just being swallowed up by Tether. So here's just a little bit talking about these other 3 exchanges, how they're unbanked, so they don't have direct access to the US financial system, most likely because no US institution is willing to serve as their correspondence bank. And so like I said, there are a few out there that are reputable like Coinbase, Bitstamp, and you have to have a lot of compliance with a bunch of the regulations to be able to to be able to achieve that. And so again, the two most reputable exchanges, Coinbase and Bitstamp, neither of them support Tether at all on the platform. Now the thing with Tether is that the company can issue new Tethers whenever they want, and they claim they're all backed by dollars, but in reality we'll never know because they've never had a full audit. But what you can do is track the number of Tethers that have been created. And so what this author did is they took a look at the lawsuit history, how that's been progressing and the number of Tethers, and when you compare them, a pattern definitely emerges. So you have lawsuits, appeals, and then on July 9th, 2020, less than a year ago, the New York Supreme Court dismisses Tether's challenge on appeal, which basically means that at this point, Tether's going to have to comply and turn over their documents to the Attorney General. And now if you take a look at the number of Tethers that were created from that point, it really just goes parabolic. So at the point that Tether now has to comply with this lawsuit and turn over all their paperwork, they start issuing a ton of new Tethers, which are supposedly all backed by dollars. And so this is something that's continued accelerating. In the first week of 2021, they issued 2.3 billion worth of Tether. And so this is speculation that the company Tether was issuing Tethers faster and faster to be able to maximize the amount of money they can make, basically, before they got shut down, which is probably pretty likely at this point. And then some more evidence of this link between Tether and Bitcoin is that the issuance of Tether and the price of Bitcoin are highly correlated. These charts are almost identical, pointing to when there's a large amount of Tethers being issued, the price of Bitcoin tends to do very well following that. But again, this is all just coincidental. It doesn't prove that it is only Tether that's pushing the price of Bitcoin up. And again, there's still no evidence that Tethers aren't actually fully backed by dollars. But this was enough for this author of this article to see, so they liquidated their crypto position back almost a month ago, just over a month ago, January 9th. But they continue to do some digging, and there's some more information that they find out. So now the author of this article talks with someone that uses one of these offshore exchanges called Bybit, and through this conversation, they learned that they actually don't allow trading in USD, in United States dollars. Instead, you have to buy Bitcoin directly and then transfer onto the exchange, and then you'll be able to trade. But the thing with these exchanges is that they often offer extreme leverage. So you can leverage up to 100 times your position. And they also have a bunch of promotions where they're giving out Tethers like candy for doing things like inviting new users and trading on the platform. And so from this, it seems like all of these exchanges are giving away massive amounts of Tether that if they were actually backed by dollars, it would be hard to recoup all that money, just from the trading or other things that people are doing on the platform. Now, there's some more evidence for this, that Tethers are being issued in exact blocks of perfectly round numbers. And so there's a Twitter account that keeps track of all the Tethers being issued, and they have this documented. And this is something that's uncommon. If you take a look at another stable coin, which is supposed to act like Tether, which is the USDC, which is Coinbase's stable coin, which is audited and is confirmed to be backed by real dollars. You can see that the amount of issuances are not whole numbers, they're random. And that's probably what you would expect with this sort of thing. And so now we have all this evidence, but the question still remains, are Tethers actually backed by real dollars? Right? None of this will matter if they actually have enough dollars in their bank account to cover all the Tethers in existence. And now there's actually a way to find out how much money the Tether company has in their bank account, where they have a bank in the Bahamas that discloses how much foreign currency its domestic banks hold each month. And so through this, the author took a look at the company's balances, and what they found was it's not nearly enough to cover all the Tethers in existence. They found that from January to September of last year, the amount of all foreign currencies increased by 600 million, but during that same period, the amount of Tethers increased by 5.4 billion, so almost 10 times more. So almost 10 times more Tethers were created than increase in foreign currency that the Tether company was holding. And so a conclusion you can draw from this is that the company doesn't have enough actual money to back all of the Tethers at the rate of $1 per Tether. So now this isn't just this one random author of this article saying this. There's also news coming out from companies like JP Morgan, which has been getting more into cryptocurrency. And even they posted this just a couple of days ago. A sudden loss of faith in Tether would pose a risk to Bitcoin. And so if anything ever happened, the most likely result would be a severe liquidity shock to the broader cryptocurrency market. In this article, again, it says that Tether functions like a traditional bank, but it's not subject to the same disclosures as conventional banks in the United States. and they haven't produced an independent audit, which is probably the biggest red flag of this whole thing. And they still have the lawsuit going on. And at some point, Tether's going to have to reveal if they actually have enough money to back all of the Tethers or not. So now when I read this, one of the first things I thought of was going out and shorting Tether, because if it's actually pegged at the rate of 1 Tether per dollar, and then everyone finds out that there's not actually enough dollars to back all the Tethers, that rate would collapse. And so I think potentially a low risk way to play this would be to short Tethers, where your supposed downside wouldn't be very much since the rate is pegged at around $1 per Tether. If you take a look at the chart of Tether to US dollars, it's pretty consistently flat around that $1. Occasionally it'll have a few spikes by a few percentage, but potentially this would be a low risk way to hedge against this actually happening if the price of Tether does crash. Now the problem with this is, like I said, none of the most compliant cryptocurrency exchanges currently offer Tether. So to be able to do this, you'd probably have to go with one of those sketchy offshore exchanges. It's not something I know if I potentially would do, but if anyone knows a way to be able to put on a trade on Tether with a reputable exchange, let me know down in the comments, because that is something I would definitely take a look at. But now in terms of Bitcoin, does this mean the price of Bitcoin is going to collapse? It's hard to say. I think this is definitely a real risk. This is definitely something that could qualify as a black swan that could potentially blow up the entire crypto market. Now, I don't know if it's going to happen. Again, it's not really clear how much Tether is actually backed by dollars. And so over the next few months, the lawsuit should provide some more clarity on that issue. And I'm not going to run out and tell everyone to sell their Bitcoin because it's going to collapse, because ultimately I don't really know how this is going to play out. I still own a chunk of Bitcoin, a small enough position that it doesn't matter to me if it goes to zero, but I just like holding some for the optionality of it. But at the same time, I do think it's important to be aware of all of the risks, to be fully aware of what you're investing into. So that is why I made this video talking about the risk between the relationship of Tether and Bitcoin. So I'm not planning on selling my Bitcoin, I'm just planning on holding. Again, looking at shorting Tether is something I would potentially do if I did found a secure way to do that. But yeah, I thought this was a super interesting article. Again, I'll put the link down to it in the description if you want to check it out for yourself. And let me know what you think about this. Do you think this is a real risk for Bitcoin and all cryptocurrencies, the fact that Tether may not be fully backed by dollars? Let me know down below in the comments. So that's it for this video. If you found value out of this, hit the like button to help out my channel, sub to the channel if this is your first time here, and that's it for now. So I'll see you on the next video.